Hey guys, hope you are all having a great day. Today's video is going to be more loaded than Mia Khalifa, so there is little to no point in introductions. Sit back and buckle up because we have a lot to talk about and we are going full Tokyo drift, and for the love of tendies, stop resisting the urge and hit the Discord link in the video description to join the coolest trading room out there. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with the stock market. Stocks fluctuated a lot, switching between gains and losses, showing a mix of feelings among investors. We had an abrupt sell-off earlier in the day, with investors clearly nervous with soaring bond yields and mixes earning results among some of the more important and major index components. According to some so-called experts, recent volatility across large assets reflects investors' ongoing reassessment of highly valued asset prices. Fed officials are quiet, mostly due to having a meeting next week and not wanting to allude or say anything out of place. Policymakers over the past several weeks have telegraphed that they are gearing up to raise interest rates and draw down the nearly $9 trillion on the Fed's balance sheets as economic recovery continues and inflation soars. Indeed, broad-based reevaluation of the highest growth shares is taking place, but I don't think it's only for the biggest stocks. I think it is happening all across the board, and as I have said previously, investors are looking for investment options with higher profit margins rather than just explosive revenue. I briefly explained this psychological trading aspect on this week's Sunday video. Talking about inflation, the United Kingdom is contending with new data showing inflation hit an annual 5.4%, the highest since March of 1992, and up from the previous 5.1% that was recorded in the month of November. On a monthly basis, consumer prices rose 0.5%, moving past economist projections for a 0.3% climb. The cost of living in the UK is high, and a recent poll given to economists paints an even worse future, with the expectation being that inflation will continue to increase moving forward. The Bank of England, much like the Fed, is expected to look at hiking interest rates again as well, while also operating against a remarkably tight labor market. If you live in the UK, you can expect price increases all across the board, from food to gas, and even energy. Inflation is high and here to stay for a while, though I think it will still be sustainable, so don't get your pitchforks just yet. For all investors, foreign and domestic, remember that stocks and bonds respond very sharply to inflation, and even more so to the expectation of it. As such, both stock and bond markets have begun to price in recent hikes and expectations of what is to come, which is the main reason why we are seeing a correction in stocks at the moment. Take advantage while institutional investors get out and buy those dips, for every correction is followed by a bliss rally that sends everything up, and with Jerome Powell seemingly poised to win another 4 years as Fed chair, you will be a fool to bet against the market, and much more to not join it by positioning your money in the best stocks. This is suited for everyone, but mostly the GameStop investors. ComputerShare posted a video saying that they have increased the ceiling of their limit sell order from $1 million to $9,999,999. This was done directly to accommodate the needs of GameStop shareholders, who continue transferring shares. It was amazing to watch and see ComputerShare officials point us out and do this for us. I am super happy that they did this for us. This was a major concern, and I am glad to have a company acknowledge and make the necessary changes that retail investors demand. This is how every financial institution should be. Too bad that most of them work against retail and bet against their own customers. ComputerShare is leading the way forward for us. The big story we are going over comes from Financial Times, who reported that hedge fund managers fear the painful losses they have been suffering in the meme stock trading frenzy of January 20, 21 will be repeated if regulators continue moving ahead with reforms to securities lending, which is one of the most opaque practices in financial markets. Buckle up, because this might be pretty triggering. As you know, hedge funds like Melvin Capital, Light Street and White Square all experienced big losses coming from their bet against meme stocks. The extreme losses unleashed a lot of resentment and anger among heads in Wall Street, which quickly moved to implement some of the craziest manipulative techniques to short meme stocks. But what has caught their attention more than a bunch of retail traders sharing memes on social media is the SEC, who, being led by Gary Gensler, said it is time to bring securities lending out of the dark. This SEC proposal is set to reform securities lending arrangements, which currently allows hedge funds to pay a fee to borrow stocks and bonds in order to bet that an asset will fall in value, a fancier way of saying short selling. These drastic changes in reporting and disclosure standards have triggered hedge funds and other bad actors in Wall Street who have benefited from these cracks in the system, including BlackRock. Hedge fund managers have already started taking jabs at the newest proposals, calling them misguided, and saying that they could create more meme stock-style volatility leading to situations similar to the GameStop market event. Of course, they would be scared of another GameStop situation. Their practices of shorting stocks out of business would be directly challenged and destroyed by retail investors, who will come to save any company that they overshort. You see, the new SEC proposal would allow traders to front-run and short-squeeze hedge funds that wanted to bet against a company stock. BlackRock has gone public complaining that intraday reporting would provide low informational value to the SEC while imposing significant costs on lenders. BlackRock prefers to have deadlines for reporting where they can easily hide and shift things around to their benefit. BlackRock recently bought 9 million AMC shares, but you can bet they will allow all those shares to be shorted. They honestly play both ends of the game, as they are setting themselves up for success with a squeeze and to capitalize on lending shares to their friends who need those shorts. The United States stood to value all securities on loan around $1.5 trillion at the end of September of 2020. The data, however, is both incomplete and even worse, unavailable to the general public. Gary Gensler has received a lot of criticism, but I am backing him up 100% on this push. Stop allowing Wall Street to do as they please and fight them on every field. Hedge funds are clearly scared, and they have even said it, and it goes to show just how fragile of a position they are in. They don't want a level playing field because they realize they aren't special, and that playing by the rules means normal earnings without screwing over the rest of the market. For once, I am cheering and happy about the SEC, and will continue to monitor this situation as it develops. Let's now talk about today. The Fed submitted over $1.656 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 53% of the total volume today, while dark pool trades for GameStop accounted for 41% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 2% for the day. During the pre-market, it began trading above the VWAP but below yesterday's after-hours closing price. Upon market opening, AMC slightly bounced from 18.48 to 19.42. It slightly dipped, and after attempting a failed second breakout above 19.20, AMC retraced, reaching 18.04 at one point. After reaching this low, it bounced up, reaching and breaking the VWAP resistance line, but being unable to consolidate above it, it fell down again to 18.40. AMC starting move up again, this time reaching $19 again before falling back down and closing at 18.32, below the VWAP. As for what to expect for tomorrow, AMC will find support at 18, 17.50 and 17. Resistance will be met at 19, 19.50 and 20.80. AMC failed to really break above $19, and because of that, unless we see a market rally tomorrow, I find it more likely that the stock price will be testing support at 18 much more often and probably break underneath it again. Some stocks bounced today, but the general market is trading very weak for reasons already explained. AMC will continue to get dragged down with it for the moment, so adjust your expectations on what is to come. GameStop traded bearishly, losing over 2% for the day. It began trading bullishly during the pre-market. Once markets opened, GameStop continued climbing up, reaching 113 at one point. Once it reached that peak, GameStop started falling, reaching 104.40 at its lowest point. Once it reached that price, it bounced up above the VWAP and consolidated above it for a while. After a couple hours of trading, shorters dipped GME back down to a closing price of 106.57, below the VWAP. As for what to expect for tomorrow, GameStop will find support at 104, 102, 197. Resistance will be met at 109, 112 and 115. GameStop is in the same position as AMC in the sense that market conditions are being used by shorters to really impact the price. They are dragging this down, and I find it more probable for the stock to break under 100 more than bounce up, though anything can happen. I am personally waiting until Friday to buy, though I might buy tomorrow depending if we break below 100. Come join my Discord, link is in the description below. We have reached almost 1,000 members and are having a blast over there. For those interested in alerts for scalping and day trading, I have set up a service there as well, so come check it out. Let me know if you have any questions and what you thought about the video. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.